Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, May the 2nd, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. We do not know what the market's going to do, so therefore we create our two main hypotheses, and then we wait to see which of the participants take control, the buyers or sellers, and then we execute hypo 1 or hypo 2 based on that information as it's exposed into the marketplace. We also have two alternative hypotheses, hypo 3, hypo 4, sometimes hypo 5, depending on the situation, and those are basically for expansion days or trend days. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the trading day. This is the wrong day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trading plan, and your own risk metrics. So taking a look at yesterday, I didn't take a screenshot. So basically, our main hypothesis was a open auction out of range, a push up into the 47 area, and then a rotation down into the 33, basing and going sideways into today, which is the Fed day. Hypo 2 was a rotation down into the 33, maybe a late day probe down to 27, then finding buyers and rotating us back up into the prior day and pushing up into that 57 area. That's basically what we got. Got a little bit further extension than we anticipated, but we did make the move down into the 33, pushed a little bit lower, and then found the buyers rotating us back up into the prior day range, and then we didn't quite get to the 57. We did that in the Globex. We did close near the high. We did leave value below down here at the 2630. This is important because if we take a look at the structure on the larger time frame, you can see that these 2 days down here, when we first made the move down to that 2611 last week, that the 2-day microcomposite where the buyers stepped in was down here at the 33.25, and that's why we were looking for that to test. Of course, this time they came down and they pushed through, didn't quite get to the lower side of that balance and at the key line in the sand at 1850, but those buyers did step in, and you can see we spent a pretty good amount of time putting volume off in that 30 to 33 level. Another thing I want to point out, talk about the FUBAR Mr. Sneaky all the time. There's a good example of it being at the low of the day, and there was one right here as well, which gave you an 8-point counter rotation. But this was a nice one here. So let's just take a look at the earnings and the news. So far, again, this morning, earnings are better than expected for the most part. MasterCard, Chesapeake, CVS, Estee Lauder, Garmin, SodaStream, ADP, Yum Brands. They're all hitting pretty good and beating their expectations. After the market today, we've got Square, we've got Tesla, we've got Fitbit, Sprint, 3D, FireEye, Alexis, Logitech, Kraft. So we've got Marathon Oil. We've got some big names again after the market closes. Of course, the big news today is going to be our economic news. We did have the ADP unemployment change. It didn't really get much of a reaction to the upside. It wasn't that big of a beat, and we've actually moved down from where we were. We popped up into I think the 54 area, but we've come down and went as low as I think 48. 48.50. And so we didn't get a real big reaction off of that news. No real news until we get to ISM in 54 minutes. But the next real big news is going to be here on crude inventory at 10:30 Eastern. And of course, the market is waiting on the FOMC statement and the interest rate. And this is, I think, it's pretty much baked in that we're going to get a interest rate increase, and the market is already factoring that in. But you never know how things are going to go. Other than that, that's about all the scheduled news that we have for the day. So let's just take a step back, take a look at the macro. I always start my day with a simple candlestick chart. I use a 9 EMA, 20 SMA. What I'm doing is I'm looking at where we are in the time frames, the different time frames. I start with the monthly and work my way down. And you can see on the monthly, very good trend. The trend is holding. We are losing some slope and separation, but for the most part, we're holding above the 9. So the trend is intact, although it is being challenged every time we move below it. Going to the weekly, you can see that we do have a possible trend change. We were having a nice upward trend, then they broke through, tried to take it back, and now they failed again, and we currently are trading below the 9 and the 20. We don't have any real slope. We're still in this consolidation phase and inside of this balance zone and waiting on a bigger breakout that has not happened yet. Going to the daily, you see that the daily again shows us a symmetrical triangle and consolidation inside of this larger value area, balance area that we're at. But we are below the 9 and the 20, and still this week failing to get back above the 9 and the 20 so far. Going to the 4-hour, again, it's telling us the same thing. We're in this consolidation, and we're just basically chopping and going sideways. But we're having a hard time holding the 9 and 20 right now. And then just going to the 30-minute, again, same story. And this is a rudimentary thing that I do every day, but it's important because I want to make sure that I understand that in a larger time frame, okay, we're still in this upward trend, and as we move down, we're seeing a weakening, but there's no evidence which way this consolidation is going to break out. So if we take a look at the bigger picture, we fell out of this micro composite value area up here that's centered around the microcomposite VPOC at 28.31, and we gapped down on the 2nd of February, and that's where I started my new microcomposite, and we've tested through this multiple times. We're currently still inside of the value area that is very wide, which runs up to the 27.25 down into the 26.01, 26.02 area. And our VPOC shifted on Friday up from the 57 area where it was up into the 69. But since then, we've broken down on Monday and Tuesday and come down into this 33 area, picked up buyers once again, and now we're rotating back up towards that 69. Key levels to pay attention to today is going to be this 40 and a quarter. 40 and a quarter is going to be our over underline. Below it, I'm looking for another rotation down into the 33 and a quarter. And if that doesn't hold, looking for a push down this time to test the key line in the sand down here at 1850. Above 40, I'm looking for maturing of this distribution zone. You can see that we have undetermined fair value right now in this area. It's pretty blunt between the 40 and a quarter and the 84 and a quarter. And what we need to determine is, in the smaller time frame that we're in, where are we in terms of most accepted price? And when we don't have it, what happens is you end up with this chop, okay, back and forth as they explore and try to find the most accepted price. The value area for this microcomposite, the smaller microcomposite that runs from this breakdown, which is on the 22nd of March. The value area high is at 75.75 area. Remember that 26.75.75 is our year open, and the value area low is down here at the 26.09 area. So again, not a lot of information in this area because we have undetermined fair value. So likely to see a lot more chop, in this area until we mature the auction. Taking a look at the overnight inventory, we opened up and then we had this big sell-off down here. I think this was news related on something about Mueller and a subpoena, talking about subpoenaing Trump rather than just asking him to come in for an interview. But I wanted to point this out because here we are with that FUBAR Mr. Sneaky setup yet again. It was a great setup, and you got the rotation, and you could have held that all the way up to the Globex high at 58.50. The inventory itself is about 90%, net short from, what was the open? The open was 52. So 52, well, you know what? I take that back. The inventory is pretty balanced. I'd say it's about 50-50. Very, very ugly looking profile. You've got a pretty significant LVN here at the mid at 51. It looks like there's a pretty decent excess low overnight. I'm looking for the continuation up into the 55 and 57 area coming into the RTH session. So taking our overnight information, our overnight low is 43 and a quarter. Our overnight high is at 58.50. Our 20 period daily ATR is running right now at 41.33. So what does that mean? It means that based on the overnight low and overnight high, we have range capabilities up into the 84.50 or down to the 26.17 and a quarter without expanding the 20 period average true range on the daily right now. And that's important to keep your eye on, because it will keep you without getting stubborn in one direction or other, and not be surprised when we have a large range. I mean, our range yesterday was 34 3/4 points. We continue to see these large ranges, and that gives us opportunity to trade off of, versus trying to trade within a 6 to 10 point range. So in terms of hypotheses, we're currently trading right now at the 50-50. I am looking for a hypo 1. And hypo 1 and hypo 2 today are going to be very much equally weighted. I think we're either going to come into the Fed in around the 33, or we're going to come into the Fed in around the 69. That's my thought process in this, okay? So in terms of my hypos are going to range, okay, up into the 2 o'clock. I can't go beyond that because I do not know how the market is going to react. So hypo 1 is going to be a open auction in range, just out of value. I'm looking for wide rotations, probably a close of the naked close at 51.50, but I'm looking for a move down into testing this overnight low and the value area high, and somewhere between here and the 33, I'm looking for buyers to step in, move us back up, test the 54 range, and then push up into the 69 and come into the Fed and the 2 p.m. Okay, right here. Can't write very good there. Into the FOMC in around the 69 area. So that is hypo 1. Hypo 2 is a open auction in range, okay, a push up into the 57 area, okay, and then seller stepping in, rotating us down into this 43 area, and then pushing down into the 30 to 33 area and chopping into the 2 o'clock and waiting for that Fed announcement. That is hypo 2. Hypo 3 is going to be a continuation pattern up. So I'm looking for an open auction, failure to get below the 40, buyers step in, rotate us up into the 69, and you know what? Hold on a second. I should be thinking ahead of time to make sure that I have room to draw these things. That's why I don't like using the drawing tools, but people are asking me to do it. So hypo 3 is a continuation up, open auction, they push down into the 43 area, 41, then buyers step in, rotate us right up into that 57, push up into the 69, and then get a push up into testing this range high, okay, and coming up and closing somewhere up here, coming into the Fed, and possibly even a late day probe up into the 2700 based on good news, or move back down into the 57 based on bad news, or bad reaction to news, I should say. And then hypo 4, wait a minute, gotta move this down now because this is a continuation down. And a open auction in range, failure to break out of the prior day range high, or a false breakout up into the 57, but basically sellers step in, rotate us down into this 33, fail, push down into the 18, chop in here, and then push through and come into the Fed down here, testing the 2600 level, and then based on news, either move back up into the 33 or down towards that 2586 area, which is a larger time frame microcomposite VPOC. Don't like these drawing tools. That's what I'm looking at in terms of the ES. Now there is a fifth alternative, which is basically we chop inside of yesterday and just chop going into the Fed and come into the Fed inside of the prior day, most likely in around the 33 area if that plays out, and basically getting an inside day up into the Fed announcement. Going over to gold, gold went and hit that target we were talking about. You know, we had broken below the 1390. We were looking for it to come down and test this 1306 level. It pushed through down to the 04 and did not hold below the 04. What do we get? We get a rotation back up. The 2-day microcomposite VPOC is up here at the 1310 area. We're currently trading 1309.60. I expect us to chop in this area coming into the Fed, and then based on the news, either a pop back up into the 25 or a breakdown and a break below 1300 and a move down to the 1290, depending on how they react to the Fed announcement. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.